I think both private investors and public investors have an important role to play when it comes to building a resilient infrastructure for the 21st century. For institutional investors, infrastructure investments potentially provide stable and predictable cash flows and make it an interesting asset class. I think it's the responsibility of institutional investors to understand how infrastructure contributes to resilience and the green economy, and what type of infrastructure investments will be needed for a resilient economy. I think it's a role of the public actors to create the stable policy environment that allows private investors to invest in infrastructure, and I think it is also the responsibility of the public sector to invest in those types of infrastructure that maybe can't be made to work for institutional investors from a risk-return perspective. We see a lot of potential in the green bond market. We have seen very strong growth in that market segment over the past year, and we think that this growth will continue. Green bonds are always going to remain a segment of a much larger and much bigger bond market. But green bonds are a great instrument to not only raise awareness about environmental issues and about projects that have environmental benefits, but to really educate investors and make investors become more comfortable with investments that are linked to environmental infrastructure, environmental projects, and hopefully that will lead over the long term investors to access projects more directly, invest in other assets that create environmental benefits, and as such I think the potential of the green bond market goes way beyond just that specific subsector of the bond market.